The biggest surprise at Apple's product event was the pricing for the company's new streaming service. It came in at $4.99 a month. Apple shares ended the day at their best levels of the year. And joining us right now for more on big product announcements is James Wang. He's an analyst at ARK Invest. Also, Roger Cheng, who is CNET's executive editor. And Roger, why don't we start with you just for the landscape, what you went in expecting and what was the biggest shock?
Yeah, well, we were expecting kind of a ho-hum event. Like a lot of the rumors have pointed to the same 3 iPhones that we got last year, minor upgrades. I think the biggest surprise, as you said, the price for Apple TV Plus.
That brings us to the point, though.
Apple TV Plus, as well as the lower-priced iPhone 11, price cut from last year's iPhone XR. So, in all, just the fact that pricing went down is kind of different, a different idea from what we've been thinking of with Apple.
The pricing coming down, is that important because they need to bring more people into the product line? Is that an admission that maybe the price hikes went too high last time around?
I think it's a little bit of both. The fact that the iPhone XR was the most successful product last year, I think they're doubling down on that success. But also, it's acknowledgement that they need to bring in more customers because if they want to convert them into subscription-paying customers, they're going to need that larger base.
And James, that's the big deal. This company has been on an evolution of sorts, going from the hardware company to more of a consumer company where they have this ecosystem, they lock everybody in. How do you think they're doing on that front, and where do you think the street is in terms of reflecting that?
I think they're doing a great job. The iPhone is a 13-year franchise, and people are always looking for them to come out with a new iPhone that's going to blow them away. Let's be realistic. That's not going to happen anymore. It is okay. And Apple has built this wonderful franchise over 13 years. They're now in the process of monetizing that franchise. So they're moving from just selling bits of hardware. They'll still sell great hardware, but now they can sell to an installed base of over 1 billion users, things that cost $10, $15, $20 a month.
It seems like all of that means the stakes are somewhat lowered each time they have one of these announcements. Expectations were not very high, as most people have commented on. And the way you can buy a phone, I mean, we focus on the price, but the fact that they've essentially got this automated upgrade cycle, what does that mean in terms of the valuation of the stock? Because I always thought the fact that it was so hit-driven kind of restrained the valuation.
I think the valuation of the stock slowly has been going more and more toward a kind of subscription perspective. People have been raising this. Asimco has been raising this, many, many years ago. And now we're seeing, just in terms of services, that's taking up over 20% of revenue now. That's quite an achievement for a company with a hit product like the iPhone. I thought the pricing was an interesting point. Coming at $5, it says 2 things to me,
you
right?
You mean for the TV?
Apple TV Plus, yeah. It says 2 things to me. One is that they have a realistic sense of what they've built and how good their content is, which is not that great, if that's what is communicating to you. That's good to me because that's signaling that the company hasn't been consumed by its hubris being a $1 trillion company. The second thing is at $5 a month, it really shows also how difficult it is to achieve the scale and quality that Netflix has achieved. People say it's easy. It is not easy. Even Apple cannot do it overnight.
Netflix shares were down yesterday. Roku shares were down. A lot of questions about what this means for Disney Plus. Are those appropriate concerns in your view?
The only possible concern is how competitive Disney Plus is. I don't think anyone is weighing Apple TV Plus in their monthly budget of spend. I mean, people who buy Apple products are generally pretty wealthy. They're probably the top, 10% of the wealthy people on Earth. To them, this is not going to be a weighing equation. It's going to come for free for your first year of hardware purchases. So it's kind of a no-brainer for a lot of those.
Roger, what do you think about how this plays out just in those battles for what takes over what used to be the cable bundle?
Yeah, well, I mean, look, in terms of this being a Netflix killer, it's definitely not that. Let's take that off the table. I mean, Netflix is going to remain a dominant player, and it will always be sort of a default expense for you. Apple TV Plus is definitely much more of a question mark, and $5 at first blush seems like it's a great deal, but if you look at it, it's launching with 9 shows. Disney TV Plus, or Disney Plus, is launching with a much larger catalog, a back catalog of movies that your kids probably love, and it's sort of a no-brainer purchase right now. I think Apple TV Plus, despite the fact that it's just $5 a month, still going to be a question mark as to whether or not it's worth your time or investment.